everybody, what's up? It is Tuesday, July 27th. Market was down a little bit today, off its lows, not too bad. I'm not really quite sure why the market was down. Maybe it was Fed jitters. Tomorrow, the conclusion of the Fed meeting. Asian stocks were down overnight. Chinese stocks were down overnight. So you got some headline trading there. Let's talk about the Fed meeting. I think this is the speculation anyway that the Fed is going to announce some amount of taper. Taper again is a reduction in their monthly asset purchases. I believe it is going to be with MBS, mortgage-backed securities. Now, I've talked about this many times. First of all, the Fed's asset purchases, they really do nothing other than remove income from the economy. So, the thing is, everybody looks at this as stimulus, right? But I've gone over the numbers, I've explained it. When the Fed removes these very high quality assets, treasuries, mortgage-backed, it's taking the income for itself. The Treasury's paying the income to the Fed. The Fed's giving it back to the Treasury. You got this cockamamie, Rube Goldberg situation going on. That's ridiculous. So the net result is a removal of income from the economy. That's one thing. The other thing is, the Fed continues to create problems for itself with respect to bank reserves. All right, when it's removing the assets, the treasuries, the MBS, whatever, and adding reserves, well, then you got the banks with all this cash, and it impedes their ability to lend. It impedes their ability to accumulate other assets. So, the Fed has had to devise a workaround strategy for this, and, part of the problem is of its own making. So, but what are you going to do? People are going to react. The Fed's going to announce a taper. They're going to sell the market. They're going to buy the dollar. They're going to sell gold. They're going to sell commodities. This is all wrong. All right? But this, I'm telling you right now, this is going to be the zombie reaction. We see it every time. You could go back historically and look at these moments graphically. And had you gone against that, after a period of time when these, knee-jerk reactions, when these reflexive reactions fade off, everything reverts back to the fundamental direction that the market should be going, or the markets, the directions they should be going. Look, all I can say is it creates an opportunity. You have to understand, the reality of what's going on. And if you're going to trade it, if you're going to take advantage of it, then, 99% of the time, 100% of the time, you have to go against these reactions. So that's probably what's going to happen tomorrow. I don't know. Look, that's the speculation that they're going to announce some kind of taper. It'll be very modest. They're doing $40 billion a month right now of MBS. They're doing $80 billion of treasuries, $120 billion total. I don't think they're going to touch treasuries. They're probably going to do something with MBS. Right now, as far as the fiscal flows are concerned, we're still in that, kind of level where it's not really slowing down anymore. It's not accelerating. I think it's enough to sustain, the market rally. Definitely, historically, this is huge. You're looking at right now, a 2.4, 2.5 trillion deficit. That's over 11% of GDP. That is a big amount of net income transfer from the government to the non-government. So, I don't really see a problem, particularly since the Fed has, come up with this workaround situation for reserves. I talked about this in my video yesterday. If we did not have this, these operations by the Fed, if they were not engaging in these reverse repos and, sweeping this cash out, then yeah, we'd have a big market crash. No doubt about it. That's why, the Fed and other regulators test the banks. I think they test the banks for something like a 55% asset decline, something of that nature. We might have seen that, if it wasn't for these reverse repos. So as long as the Fed's going to continue doing that, I said yesterday it was kind of like a Goldilocks scenario. But having said that, I don't stop looking at the fiscal flows. If they really start to roll over and go down, that's another story. But right now, they're stable. They're stable. So I anticipate tomorrow we're going to see some kind of a negative reaction from the Fed when they announce taper. We'll see what it is. Companies that have reported earnings, almost all of them are talking about continued supply chain issues. So the price pressures we are seeing, this is still pandemic related. And by the way, as I mentioned pandemic, I'm sure everybody is aware now that, CDC is once again recommending masks for people who are vaccinated if they're in outdoor, even if they're in outdoor spaces with other people. So, we're seeing a resurgence of the virus. It's just going to make it more difficult to alleviate these pandemic-related supply issues. So price pressures are probably going to, remain at levels that we've seen now for months until the supply chain issues are resolved. But like I said, almost every company that has reported earnings is citing these difficulties, and they're also talking about raising prices to offset. This is not a monetary phenomenon. This is clearly a supply shock issue. It has to do with the pandemic. It has to do with these bottlenecks. And, until that's resolved, we're going to see some elevated level of prices. I don't think the Fed is too concerned about inflation per se. I think it does want to, I've said this before, I think it has been wanting to cut back on its asset purchases for a long time. But like everybody else, the Fed believes that stimulus, and they are deathly afraid to cut back because that's also their view. But we'll see what happens tomorrow. But I'll say this: if we do get a correction or a pullback off of the Fed, whatever they do tomorrow, I see that as a buying opportunity. And I'm going to say that until I see the fiscal flows really start to decelerate. And so far that hasn't really happened. So anyway, that's the update for today. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See everybody tomorrow. Bye.